Hi everyone, I'm Emily, and today we're talking about a company that's been catching a lot of attention lately, Rigetti Computing, ticker symbol RGTI. The stock has been on a wild ride this year, jumping more than 150% in just a few months. But is this rally justified by fundamentals, or are investors getting ahead of reality? Let's dive in and find out what's really going on behind the hype. Rigetti is one of the few public companies fully focused on quantum computing. It was founded in Berkeley, California, and its mission is to build practical quantum computers that can outperform classical systems in solving complex problems. The company designs and fabricates its own superconducting quantum chips, integrates them with control electronics, and connects everything to its cloud platform called Forest, where developers can write and test quantum algorithms. In short, Rigetti isn't just making hardware, it's building an entire quantum ecosystem from the ground up. But doing that is incredibly difficult, and so far, not very profitable. Let's look at the numbers. In fiscal year 2024, Rigetti reported revenue of around $10.8 million, which actually declined by about 10% compared to the previous year. In the first quarter of 2025, revenue dropped even further to just $1.5 million, a 52% year-over-year decline. Those figures show that demand is still early stage and consistent commercial income hasn't arrived yet. Now here's where it gets interesting. In the same quarter, Rigetti reported a profit of 13 cents per share, but that's not the full story. The company recorded a non-cash gain of about $62 million from revaluing its derivative warrants and earnouts. So that profit didn't come from operations, it came from accounting adjustments. If we exclude those items, the business is still losing money and burning cash. Speaking of cash, Rigetti currently holds enough to fund operations for the next few years, but its path to profitability remains uncertain. The company has to balance R&D spending, production costs, and long hardware development cycles, all while trying to keep investors confident. On the bright side, Rigetti has started landing some real contracts. Recently, it signed a $5.8 million agreement with the U.S. Air Force to develop superconducting quantum networking technology in partnership with QFOX. It also received purchase orders worth $5.7 million for two of its Novera quantum systems. These deals might sound small compared to tech giants, but they're meaningful steps toward monetizing Rigetti's technology. Another promising sign is international expansion. The company signed a memorandum of understanding with India's CDAC, focusing on hybrid quantum systems and cryogenic research. That could open doors to new collaborations and revenue sources abroad. When we talk about valuation, things get tricky. Rigetti's market cap has surged dramatically, and some analysts like B. Riley have set targets as high as $35 per share, while others are more cautious around the $20 range. The analyst consensus right now is strong buy, but we should remember that this stock is extremely volatile. On some days it moves 8 or even 10% in a single session. And that's not uncommon. Technically, the stock looks strong, but the relative strength index recently hit around 86, which means it's in overbought territory. So a pullback wouldn't be surprising after such a steep climb. Let's talk about the big picture, the quantum race itself. Rigetti competes with other pure-play quantum firms like IonQ and D-Wave, as well as tech giants like IBM, Google, and Microsoft. The challenge is that no one has yet built a large-scale, fault-tolerant quantum computer. There's still enormous uncertainty about when that will happen. Some experts say it could take 10 to 15 years. That means investors are essentially betting on the future of physics, not just quarterly earnings. The technology is breathtakingly complex. Even small defects in superconducting materials can cause decoherence, making qubits unstable. In fact, a recent research paper identified niobium hydride precipitates in superconducting chips, which might affect performance in processors similar to those used by Rigetti. So yes, the potential payoff is huge, but the risks are equally high. Here's my take. Rigetti represents a high-risk, high-reward bet. If the company can turn its early contracts into a steady revenue pipeline, improve system reliability, and scale production, the upside could be significant. But for now, this is still a speculative play, not a proven business. In the short term, expect volatility. In the long term, the stock's fate will depend entirely on whether Rigetti can achieve quantum advantage, that magical point where its computers solve real-world problems faster and cheaper than classical ones. So, is Rigetti the future of computing, or just another speculative wave? Personally, I think it's one of the most exciting stories to watch in 2025, but only for investors who can handle big swings and a lot of uncertainty. What do you think? Do you believe in the quantum revolution, or is it still too early to invest? Let me know in the comments. And if you enjoyed this analysis, don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss my next deep dive. Thanks for watching, and I'll see you in the next video.